Hi, this is Sean Hyman from MyWealth.com, and I want to go over today's video blog with you. You know, there's an institutional indicator, really, and I call it that because it's really the big guys that have used this as an indicator, and a lot of the retail client base across America and around the world really has not used it as such. It's almost been a secretive indicator for these guys. Not that anybody couldn't check it out, but a lot of people weren't aware of it. What was this indicator? It was copper. And a lot of people say, these guys say, you know, copper has a PhD in economics. And why would they say that? Well, here's the reason why. Copper is such a broad-based used commodity. It's used in our homes, in offices, our computers, and our cars for wiring, you know, all this types of thing. It's used for plumbing in homes and offices and things of that sort. So it's a broadly used commodity amongst many different segments of the economy, not only in the U.S., but also globally. And so when global demand and U.S. demand is tanking, you'll see copper tanking on the chart, just like you'll see on the blogs chart at mywealth.com/blog. And this has been the case for months and months now. It's just precipitous fall. But then lately, the thing that piqued my interest was for so many months following, things went into a sideways range. And recently, this month, copper recently broke the sideways range into new highs, new recent highs. And why is that? I mean, you've got a supply-demand shift going on there. You've got new copper buying where you haven't had copper buying for quite some time now. And I believe this is something that you're starting to see the beginnings of these areas picking up, the very beginning stages of this happening. Again, economies turn around like ships, not like speedboats. So, when these things are turning, these sectors are just beginning to take shape, to shape up, and you won't see it in the news media for quite some time. Just because it's such a beginning stage that copper is the one that really finds it early on, and it's because of that supply-demand dynamic. The supply is been vast, but the demand is finally starting to meet that supply and push the prices of copper up. I also believe that when oil firmly holds above $50 again, which probably won't be too long into the future, and solidly stays at 50 plus, then I think that will be one more indication that global demand is picking up. Global automobiles, trucks, all around the world, military use, aircraft use, etc. When all this activity picks up, from the carriers like UPS, FedEx, all these transport companies, when all this activity in commerce, products and things like this start working their way around the economies around the globe a lot more through shipping and other things, I think you're going to see that oil will solidly stay above 50 at that point. So when you see copper rising like it is, when you see oil above 50, you're starting to see global demand start the beginning stages of perking up. So why is this important to you as an investor? Well, for the long-term stock investor that's interested in learning more about stocks, this is the time to learn about stocks. Stocks are at discounted levels. I mean, it is stocks, if you bought now, are like as if you bought them many, many years ago. They're at those same price levels as a whole. And so there's no better time to get started learning about stocks than now. A lot of people that missed the boat on some of these last stock market rallies, that wish they could have gotten in on some, now is your chance. Will things rally in the next couple of months? Who knows? But will things change from these levels 4 and 5 and 10 years from now? Absolutely, most likely, yes. And so I'd encourage you to get educated in our stock investing course at mywealth.com. You can click on the courses tab and find that. But also, now is the time to consider investments in ETFs and mutual funds and broad-based instruments like that. I believe that you will see a huge benefit from that in years to come, as long as you have that long-term time horizon. Let's say you are in retirement or approaching retirement, you're going to need to know also what to do with that nest egg once you pull it out of your 401k as well. And so that stock, of course, can be a great benefit to you. Also, for the currency traders out there and currency investors, I think there's huge benefit too, because once you see the global demand pick up and the global economy shift, and thus global stock markets also shift, I really believe you're going to see the dollar, what I call a dollar party, come to an end. It's where the U.S. dollar's present rally will fizzle out, because ultimately the dollar does not have fundamentals to back up its rally. The reason why it's rallied is It's because of the credit crunch and people resorting to the one paper currency that you're for sure going to need and use, which is the U.S. dollar. Why? Because it's the world's reserve currency. Most of the world's goods are denominated in U.S. dollars, so that's the reason why. So the dollar has benefited from that. However, when this shifts, and it's okay for people to come out of their fear mode and back into, taking on risk through investing in stocks and foreign currencies and things of this sort, you're going to see people dump the dollar quite rapidly, I think. And so you're going to come up on some huge opportunities in currencies. Presently, you would have the opportunities because you'd enjoy the dollar rally on the upside. In the future, you're going to have the opportunity because you're going to be able to sell the dollar and buy foreign currencies and benefit that way as well. So this is one that should matter to the stock trader, to the commodity, and even the currency trader. If you view us on YouTube, to the upper right-hand corner, I'll have links there, a place where you can click on to get free Forex demos, where you can click on to get find out more information about our courses right there from the YouTube site. Also, you can click on a link to Facebook us or to put us on your MySpace or to dig the article as well. So feel free to spread the word that way. Also, there's a place where you can leave comments below our video blogs here on YouTube, and feel free to do that. We highly encourage comments and interaction that way as well. Thanks so much for joining us. Bye-bye.